These are historic times. Let's find out what's going on in the grain market, and then we'll get analysis of today's trade and get what one expert thinks about this activity that we're seeing here. Over in the corn market right now, that's where we'll get started. It's on the lower side all the way across the board. After being about 1.5 pennies higher last night on some of the contracts, May is down 1. New crop December is unchanged. March 2021 is actually up 1/4 penny. Over in the soybean market, May is up 15 3/4. The November up 10 1/2 at 871 1/4. So double-digit gains there, as well as the wheat. Chicago wheat really taking off. July up 19 1/4. It's at 555. July Kansas City wheat up 20 1/4. It's at 5. Make that 492 3/4. The July Minneapolis wheat market is at 543. That's up 10 3/4. May cotton is down 277. That new crop December is down 246 at 52.35. And I want to look at crude oil and heating oil because these have been big players in this market lately. The May crude oil down 58 cents a barrel at 22.05. Got as low as 20.80 a barrel. And looking at heating oil now, on the heating oil market, we've got the April down just about 1/3 of a penny at an even $1.33. So with that, let's talk to Todd Horwitz, Bubba Trading here. Todd, I want to start over here in the crude oil market. You had talked about this thing really getting down there. Do you think that 20 was a benchmark for the market?
John, I think right now 20 is probably a good level. I mean, I don't know that I'd jump in and be a buyer as a trader here, but certainly I would certainly be taking care of my costs with heating oil and with crude here. I mean, again, could it go lower? Sure. But is it going to go a lot lower? I don't think so. I think the risk is not by hedging here and protecting what your input's going to be for the year, because I don't think you'll see much lower than here. And this is a nice area to know where you can actually lock in some money and make sure that these are going to be your costs for the rest of the year.
Todd, last week you and I had talked about how maybe this was a turning point. Maybe this was going to cause the fund money, that invested money, to start taking a closer look, or maybe a more serious look at some of these commodities. Still feel that way this week?
Listen, they can take a look at wheat, take a look at soybeans. Yes, corn's a little bit weaker here, but I expect that to start to catch up pretty quick here. I mean, just look at the whole complex. I mean, everything is exploding higher with the exception of corn. So to me, this is exactly what we talked about last week, and I think that we're going to continue to see these moves in our favor now because, again, I think the panic selling is over. There's going to be money searching for a home. You've seen what the Fed is doing, and one thing we know for sure, people got to eat. No matter what goes on in the economy, people got to eat. So I think we're going to start to see more of this, and people will be searching for these bargains, and I think that's what we're seeing today.
One more question then before we wrap up. What's your feeling on all of this stimulus? Is the Fed doing all it can right now, in your opinion, to help boost and hold the economy together? What's your view on the economy as we stand today?
Well, as you know, I've said I thought we were in a recession about 6 or 7 months ago going into the early stages. So that has not changed. I think the Fed has totally blown it once again. All of this stimulus, all this is really doing is creating more debt for Americans. I mean, at the end of the day, the middle class has to pay all this money back. So I think that they've made a horrible mistake here. They should let the economy trade. They should let the free markets trade. And all of this free money does you no good. You go look at Japan, from still struggling from 1989, trying to get back to where they were. Look what's happened in the Eurozone. So again, to me, this is ridiculous. But again, that's it. And this is where I live. So I have to live with what they do, but I do not agree with it at all.
Okay, we'll be back in just a moment. We'll talk about the livestock trade and what you think the meat complex is up against. That's straight ahead here on the Market Day Report. Let's start here, and this time we'll start with the U.S. dollar. First of all, and over here on the dollar side, we are on the higher side, 660 points higher on the June contract, 103.20, so we are well north of par. And I remember a time when Todd Horwitz told me we were going to par in the dollar, and well, he called that one right. September up 690 at 103.19. Now on to the futures market, and lock limit higher is where we were at. We're still there. April live cattle 101.65. All of those front 5 contracts cannot move because they're locked limit higher. So are the feeder cattle market, 450 higher. If we would finish the day with the top 2 contracts And either the fats or the feeders will have expanded limits tomorrow. Same thing for the hogs, April to May, limit higher right now. And the same thing stands there as well. Todd, what's your thoughts on the dollar? You told us this time last year, you and I talked about this thing going to par and then north of that. Now, do you think that the coronavirus actually helped push us over par? Where do we go from here with the dollar? And does it affect our exports?
Well, I think that the dollar is probably still going to go higher. Remember, the dollar is also a fear asset that a lot of countries go to protect themselves against what's going on with the economy. Because, again, the U.S. is always the strongest of the bunch, so I think there's still money flowing into dollars. I think, obviously, with the coronavirus, we were already headed higher, John. And, you know, is it the coronavirus? I mean, this lack of being able to export, and it's not even because of the dollar right now. It's really because there's nothing going out right now because of the disease. So I think that eventually it'll calm down. The dollar should come back a little bit, but you're still going to have that fear factor. And it shows you how strong the dollar really is, because with all the Fed is trying to knock the dollar down. That's part of this whole program, and they have been unable to do so, which is a bigger problem, and it's showing you how much underlying problems are still in the systems.
I've got just a few seconds here, so just a quick answer. But that does create hyperinflation, right, with the dollar headed that much higher?
It could cause a lot of problems. But again, in the meantime, the market should settle down. But again, as long as the Fed keeps fiddling around in it, they're going to create the problem, which is what they've done over each time they've tried to get in and involve markets, they've actually caused a bigger problem instead of letting the markets trade freely.
Okay, Todd, thank you very much. I do want to quickly check the pork cutouts here at midday. The pork number was released. The USDA still not has released the beef number. All the way across the board here, Christina, everything higher, and the carcass is leading the way, 417, or the loin's leading the way, $5.98 higher, almost $6.